It's nice to have you here for Monday's edition of Trading Buddies, and I thank you for being our Trading Buddies on this Monday, the 17th of April. It'll come to me. Sorry, I'm in a bit of a flap. I only just got to the desk in time to start, so hopefully I can catch up and find out exactly what's going on around the place. I will start, of course, as usual, by going to the gold screen and see what's going on there with gold and see if we can get a trade out of it. I don't think I need that anymore. It looks like Friday we had a bit of a sell-off. And what bar is that one? 11 o'clock. So that should have been a winner. What bar's that one? 8 o'clock, 9 o'clock. So low there, and low there, high there. That should have been a winner as well on Thursday. That looks a bit iffy, I'd have to say, but I don't know where the support and resistance was. It looks like the week finished fairly well with the gold breakout trade. Let's see if we can get the start of the week doing exactly the same. Don't like the look of it, I've got to say, because we've got a low here and we've got a high here. And we're pretty much on top of that high and the daily pivot at the same time. I wouldn't take that in a month full of Sundays, but that's not the rules that we're using. So we will be placing an order long above here and we'll be placing an order short below here. Again, as I say, I wouldn't be placing this if it wasn't test in any way, shape or form, because that's just too dangerous trading into an untested daily pivot and not for me. But the rules don't cater for a filter. So at this point in time, we will be taking that trade. Got about 3 minutes to wait until that happens. It'd be nice if price went up to there and then shot back down to here. I'm asking a bit too much probably in the last minute or so before we do get into it. Hope you've had a good weekend, and I'll be joined as usual by Ash very, very shortly, and George as well, to take us through what they're looking at for the week ahead. I do have a few ideas, and most of them involve the Canadian dollar, which is, or could be a good thing, but we do have a Canadian news event tomorrow. I think that's about CPI figures, in fact, so it's relatively important. We'll see how that pans out and if we can get in the market and safe prior to that. But most of the positions that I would like to take are based around the Canadian dollar. I do have two positions on Aussie versus the dollar, and I will get to those in the not too distant future. One's up, one's down in terms of direction, going long and short at the same time, long on the daily, short on the weekly. Righto, this seems to be taking forever. Has my clock stopped or something? I don't think so. I'll give you the levels. The high will be 2014, so I'll be getting it at 2014 for the buy, and for the sell, we'll be getting it at 1995. I much prefer that one, I've got to say. In terms of if this does go, then that looks a whole lot better, because our first resistance level is probably here or here. This one's a better one because it's been support as well. So we'd probably use that 2031. So if this does take off, our reward should be reasonable. Righto, getting close, and the candle hasn't changed. I'll set the buy order. And once again, for those of you who are following this, very, 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 very small risk. Buy stop is correct. Level is 2014. And the stop loss is 1995. Take profit level is, we'll use 2000 and let's go with 2030. That will do for our take profit level. Righto. That order's in the market. I'm hopeful the price will come down. If it is going to go long, price will come down here before it takes off, but we'll accept what we're given because guess what? We've got no choice. The sell, let's place that as well. New order, which will be a sell stop. At 1995, 1995, and the stop loss will be at 2014, and the take profit for the short, I think we can use this level here as well. It'll be far less profitable than the long 1983. Or do we use DS1? It's not that far away. Let's use that low, which is pretty much bang on DS1. Let's go with 1981. 1981. Sure, something happened in 1981, but for the life of me, I can't think of what it was. Righto, so the long's in place, the short's in place. As usual, if one triggers, we cancel the other. And we take our profit full, get everything off the table at our target levels. Righto, that's gold and the breakout trade. Let's go to what I'm looking at for the week. I'll start with the game changer bars, shall I? If I can find, there we are, that one. Let's get rid of the orders. We don't want those. Game changer bars, number 2 only. One is Euro CAD. Weekly chart is suggesting that we have come back underneath. I'll go to the monthly and show you the context. We've come back underneath this trade line, which also is a confluence area with that horizontal level around about the 146.40 mark. And price rejected both the backside of that trade line and the horizontal level last month. So far this month, not a whole lot happening. Weekly chart is giving us that seller bar. I'll go a bit tighter so you can identify that. This one here, in a pretty horrible position, I've got to say. I don't want to trade short at this level because of that line that you see there. Why would I trade straight into that? I wouldn't. And I need to see that either A, broken and retested, or I need to see price pull back away from that area and give me an entry up here somewhere so that I can get some profit in the bank before I hit that support level. So definitely a no from me. But in terms of directional bias, I'm on board, 100% on board. Just need to see a better entry that'll give us a far less riskier outcome, or far less risky, outcome. So that is Euro versus the CAD. The second of the game changer bars is also CAD related, and it is US dollar versus the Canadian dollar. And once again, it's suggesting, that's the monthly, it's suggesting that we sell dollars versus Canadian dollars. Not against that either. You'll recall about 3 or 4 weeks ago, we got into this short and got a little bit of money out of it before the trailing stop was hit. What a shame. If I was still in that, I'd be more than happy. But we are at a support level, and that can be seen with that trade line, but also the horizontal level, which is 130 to 30-ish. If you go across here, you can see it has been resistance in the past. A lot of consolidation there at that level as well. Support through here. So it is a level that the market does respect, and I don't want to trade through there. So apart from that, I think you're in the wrong part of the cycle. The cycle is very much in a downward momentum. I think it needs to either retrace here and give us a far better entry, or, as I said, break the level and come back and retest it, one or the other. There is a Game Changer Plus bar, and it is Australian dollar versus the Japanese yen. Game Changer Plus, for those of you who don't know what I'm talking about, there's the Game Changer bar from 2 weeks ago, which is, of course, a key reversal bar. Higher high than the previous bar, closed on near its low, which it did. Didn't take that position, It was tradable, but at a strong support level. So no, it wouldn't have triggered anyway, but we got an inside bar, a very decisive, and you would have to say prominent, if you like, inside bar. But it's an inside bar nonetheless. And when we get a key reversal bar followed by an inside bar, it's like we have been triggered long on the gold trade. When we get that, the directional bias is with the first candle, which of course is short. Same applies why I didn't take it last week, because we are at a support level, but also because we've closed above that support trade line. And what I'm hoping for this week is price to give me a seller bar, maybe back to the monthly pivot and that horizontal level. Then I can look to trade it long. I'd much prefer to go long with this candle formation than I would to go short at this point. That said, if we were to get a false break of resistance up here off this trade line, and of course I'm talking next week now, not this week, that makes a difference. But it looks like we're coming into a log jam here, so it's not going to be easy to trade. So it's not even on my watch list Aussie yen. But what is on my watch list is Aussie dollar. And I've got two orders on Aussie dollar, one long on the daily chart and one short on the weekly. We'll start with the daily. Daily chart is suggesting to me that we have a false break of support, but not only the trade line, but also this horizontal level that comes through here and the monthly pivot and the weekly pivot. So it's a pretty strong statement from the buyers here that they don't like price down below the 66.5 level, and they've come back into that range, then retested all of that except for the monthly pivot. So my contention would be, if price were to return to this area, then I think it will find the next resistance level, which to my mind is around about that 68.82 mark, as I've got it there. So the entry level, if you want to follow that one, is at 0.6809. Stop loss is 116 pips below that at, if you want the exact number, save my brain, 66.93. 66.93 for the stop loss. And the first take profit is at, if I can get it, 68.80, 0.6880. And at that point, I'm going to take 1/3 off. Why? Because I think it can go a bit further up to the next resistance level and maybe even to that descending trend line. There is, after all, in more than a hint, I suppose, of an inverted head and shoulders here. It has dipped the right shoulder substantially, but this goes to my next point, which is a short underneath that bar. I'll go to the analysis chart, which is this one, where I've got the order placed on the weekly. And if I put that line back in, you can pretty much clearly see that we've had a break above it. We spent quite a deal of time up here, 2, 4, 6, 7, nearly 2 months, and then broke back below it, retested it from below. And since then, everything from a price point of view, in terms of the bodies of those candles, are inside that bearish bar. So what I'm expecting here is a breakout, either long or short, and I've got both covered at this point in time. I'm not sure which way this goes, frankly, but I'm happy to leave both in play until this does break out, because even if the daily does take off and maybe find a resistance level that we're looking for, I think it could still come back and play out this weekly scenario, which is a false break, which will give us a reasonable profit to the downside. So both orders are in place, and I think both orders are quite pertinent. There are 3 more on my watch list, and they all involve the Canadian dollar. Pound Canadian dollar is the first of them, and we have come back inside that pink box that you see there, which to my mind is early stages, but it is a box range. And off the top, we have come. Problem. we are at a support level in the monthly pivot. We have pierced that daily trend line or trade line through here, and a slight close below that monthly pivot, which is interesting. I did consider this as a slingshot dominator, is what I call that candle pattern, but it's out of context. It's really not with trend, and I like to trade the dominator with trend. I can see an untested daily pivot sitting above us, and a weekly pivot, and a trade line, which provides us with a lovely confluence. Also a bit of a horizontal level through here. So I think that's where I'd like to see price get to. And then you could take a, let's say medium risk trade selling short there, but a far less riskier trade selling short underneath that bar. Got to see a bull bar here today in order for that to take place. So that's a tomorrow thing, but most definitely on my watch list, as is Aussie CAD. Again, Canadian dollar in play with the Aussie versus the CAD. Weekly chart is very, very clear, in my humble opinion, that we are headed down to this bottom side of the broadening pattern that I see very, very clearly. Problem is we're at the wrong part of this cycle as well. We are at a support level also. So what I'm expecting here today, tomorrow, into the week would be not a reversal, a retracement. Where to? Good question. This one's very complex because of that big bear bar and those two buyer bars that have taken us back to retest that horizontal level. Now, ordinarily, I would like that to give me maybe a high test bar sitting on the monthly pivot so that I can enter again. But this one here, unexpected or unwanted, sorry, you could always rely on the unexpected, but definitely unwanted. If it was sitting up here, it'd be far better. But it's thrown a bit of confusion into my analysis. Maybe we get a bounce from here, this next little level, then give us a lower high up here, or maybe even a test in the monthly pivot. So I'm dead keen to get short in congruence, with this broadening price pattern, but also there's a little head and shoulders sitting here as well. If that's the case, that's the neckline. We've had the break. We haven't had the retest. So that's what I'm waiting for on Aussie versus CAD. I've already mentioned dollar CAD, but it's certainly on the watch list as well. Really, primarily because we're at a strong support level. Not necessarily got a directional bias here, but at this very moment, we're in a buy zone because we haven't come back below, we haven't closed below that trend line, and we've certainly hit the base of this support trade line. So looking for a bounce here, but if that doesn't occur and we break this level, come back and retest it, we've got everything going for us to go short. So CAD is very, very much on my watch list. There is a spanner in the works known as a data release tomorrow. I think it is tomorrow. I'm not sure what time, probably later in the day, around about US Open time, I would imagine. But that's going to throw a spanner in the works if I'm not already in the market. What it could do, however, that CAD news, is it could provide the setups that I'm looking for. So it could provide price back up to here and give me a short opportunity on pound CAD. Same on Aussie CAD, it could give me that retracement that I'm looking for. So fingers crossed that that is the case. Otherwise, if this disappears without me, so be it. That's what's on my mind. I'm sure there's a whole stack of stuff on Ash's mind. And we say, have your eyes open, mate. How you doing? You had a big weekend, right? Can't hear you, mate. You're muted.
There you go, buddy. Yeah,
there you go.
Yeah, you can tell that even though I've been using Zoom all weekend, I'm still no better at it.
It's a bit like that.
Yeah, I did have the odd issue with Zoom as well while I was working.
Oh, really? Okay.
Yeah, I just sometimes just forget where the screen decides to hide itself. You know, you are playing hide and seek half the time with Zoom. It's just
yeah, the control panel disappears and all the rest of it.
Yeah.
And of course, it's got 2 a.m. or something while you're trying to do it as well.
Yeah, well, but it was all right though, mate. It was good. I think it's interesting this week, mate, because actually quite often you and I agree on what we're looking at, but I'm looking at something quite opposite
This
this
is not
week.
the case. Good.
Not the case this week. No, not the case this week. And I'll show you what I'm interested in. And
All
it is
right.
the Aussie. It's the Aussie long actually. I've actually put a position
I'm
on.
okay if the Aussie goes long. I've got a long order in place as well.
Oh, okay, okay.
Hmm.
On the yen.
No, not on the yen, on
Not
the
on the yen.
Aussie dollar.
Aussie dollar. Yeah. Well, I'm also finding the dollar quite interesting as well. But yeah, Aussie dollar looks pretty good. Let's just look at it on. Yeah, that does look good actually, doesn't it? Big boost the upside down again. He didn't even look at this one properly. It's not ready for me yet, but if that probably what I'd need to see with the Aussie dollar, and I would probably join you if this does shape up, is just some definite clearance between the price and the weekly pivot for a little while. I probably want to see it come up and come back. So I think I'll be looking maybe tomorrow. And if I see sort of like some sort of bar there, then I'd be looking to go long at that one as well. That's going to be a bit of an issue, and obviously the highs are a little bit of an issue as well. But Aussie dollar does look good, and if you look at the structure on this, the interesting thing, this is a little bit problematic, but there is some structure here. You know, there's a decent little lot of horizontal level there on the hourly, and I'll check what it looks like on the 4 hourly. Yeah, I mean, it's really good structure on the 4 hourly, because if this was the previous high, we've got a higher high, and that suggests that this is this could still be a higher low. So even though the trend is a bit wild, it's still trending to the upside on the 4 hour. So I'm with you on this one, mate. I just need to see the hourly kind of shape up and give me
Well,
give me.
no matter which direction you're with me, because I'm short and long.
Oh, okay.
I'm long on the daily and I'm short on the weekly.
Okay, well, the daily actually to me looks like a long as well, just about. But I think the Aussie's an interesting one, because it's, when I look at it against the yen. I have taken this the long against the yen, but when I look at it against the yen, it does depend on which time frame I look at, which determines how I feel about it. Because on this one, it looks like we've had a little pause, and we could be pushing to the upside, but there's obviously this area here, which is meaning that it's at the top of the range, and I've taken the position at the top of the range, which I'm not super keen on. But when I look at it on the weekly, then what I do actually see is that there's a decent chance that the weekly is going to just come up and price is going to pop up to that trend line. So I've got my take profit in that area there as a potential target. The other thing is, you know, if on the hourly, it just looks like we've kind of hit this zone up here, and again, I've taken it at the top of the zone, which again I'm not that keen on, but I quite like the fundamentals with the Aussie. What's happened for me with the Aussie is that we've had this situation where it's been weakening against most currencies because the RBA have paused. But last week, particularly, the data seemed to start to turn around. And actually, in Australia, it's not that bad. And if we continue to look at what's going on with China and the opening with China, it has boosted the Australian economy. If I compare that to the United Kingdom as an example, and I quite like the look of Euro Aussie short and Pound Aussie short as well. But again, with a Euro Aussie, I'm going to need to see just this weekly pivot broken down. The fact that you got the daily pivot in the way is a little bit problematic, but I quite like the Euro Aussie for a potential short as well. But the dynamic is that you've got a stronger economy versus a weaker economy, so that's a kind of a tick. But the issue is that the Eurozone is battling inflation far greater than what's going on with Australia, or certainly they are willing to go after it more than the RBA, which will boost their currency. So even though their economy probably can't take very much more in the way of rate hikes, it appears that the ECB are going after it. The one thing that might help this out this week, and particularly today, is that Christine Lagarde is out later. and she may well strike a bit more of a dovish tone on inflation, because some of the metrics are suggesting that the inflation picture in the Eurozone is weakening. We've got the bottlenecks that they saw with food prices just starting to ease back a little bit, and obviously because we're starting to hit summer, energy costs are also starting to drop. So there might be just a slight more.
You don't need air conditioning over there, do you?
Don't need air conditioning. No, exactly. So it might be that she says something which just makes the market question whether there's definitely going to be another large rate hike, which may well just give the Aussie some boost. It does, there is a suggestion that there will be more from the ECB, but maybe not as much. Now, the other thing and also the last time we had a kind of economic report from the ECB, it was during the banking crisis, and that has just lifted a little bit. So with that lifting, there might just be a bit more positivity kind of floating around, and a little less panic.
Sorry, mate, on that point, has that disappeared? I mean, suddenly the banks are all hunky-dory again, or are they still in trouble, or they're just not talking about it?
No, I think they are talking about it, but they're talking about it in a much more positive light. I think it was one of those things that we haven't seen the contagion that they thought could be a possibility, and there was panic in the market when there was a risk of contagion, and we haven't really seen that. It seems like it's some of those larger, smaller banks. It's not a great term, but way to put it, but of the smaller banks, it's the sort of like the top end of the smaller banks that have been affected, but the bigger banks seem to be okay. The UK hasn't been affected at all, really. They've been pretty well covered, and of course we had Credit Suisse. So there was actually a large bank in Europe, but yeah, it does seem like the contagion worries have gone away a little bit. There was enough kind of stepping by governments and other bigger banks to kind of secure the issue. And they've obviously put other things in place to make sure that another banking crisis doesn't happen. Markets appears to be quite happy with that, and you can definitely see that with the FTSE.
I was actually listening to another Dalio thing the other day, and he wasn't confident at all that the banks are going to get through this unscathed. So
I wonder whether it's a timing issue, where in the short term they've managed to kind of put their finger in the hole of the dam, but actually the dam is cracking, and we do see kind of further things down the road. It does bring me back to the thoughts of the housing company that is it something like I can't remember what they're called. Everbright
in China,
was it?
Yes. Yeah.
So it brings me back to that. That seemed to disappear very, very quickly as well. A huge kind of company that looked like
a big carpet and a bigger broom, I think.
Yeah, exactly. So I don't know. I mean, the thing is, if we're thinking about this week, I don't think there's going to be any panic about the banking crisis this week, and I think that Christine Lagarde may strike a slightly more positive tone. Now, off the other side of that is the RBA. Now, the RBA held interest rates last time out, but they did say that there would be in the minutes on the February meeting. They did say that there is going to be likely further rate hikes. So they may not be pausing for that long. It might not be a pause and done. Inflation hasn't curbed sufficiently to suggest the job is done. So there's a possibility that what we read from the next minutes is that there's still some contention about whether they've taken the correct stance in pausing. So that might boost the Aussie.
They, in particular, Philip Lowe, was under enormous pressure not to raise interest rates last month.
Right.
Last month, this month, and the people who don't know, I guess, the journalists and all the media outlets, because of interest rates going up, Australia was very much a mortgage belt, if you like. Yeah. Lots of, most Australians own property. That's probably not true, but a heck of a lot of Australians own property. Yeah. And, of course, a lot of those people are investors, and they're raising interest rates, rents go up, all, the cycle. Yeah. That happens when we're in a tightening situation. And, they're just giving him hell.
Yeah.
And even the government, calling him to account. But they just don't get it. They don't get that it has to happen
exactly,
in order to get inflation down. So we want a road that's pain-free. Or at least the government wants a road that's pain-free because they want to get back in government. But that's not possible. And, we have to go through this pain. We understand that. But he was under enormous pressure anyway. And I think that added to the decision that the RBA made to pause. And when I said that before they paused, the day before, whatever it was, that I think they'll pause, it was based more on that pressure that they were under than anything else. So I think that pause took the pressure off, and next month that pressure will come back on again. The rates will go back on again. The rate hikes will go back on.
I think you're right, mate, because actually when you look at the data, PMIs are not that bad. I mean, they are under 50, so they're showing contraction, but it's not awful contraction. But the big number is the labour market is still incredibly tight. So, and you've got the reopening of China. So, and some of the demand from China for iron ore has obviously increased. And China is still aiming for some half decent growth. So I think the Australian economy can probably just about house at least another rate hike. And
one more thing on top of that, and you're talking about China. China has had for maybe 2 years, but I can't give an exact time frame, but it seems like 2 to 3 years. They've had tariffs on our beef, on our barley, and on some other commodity that I can't bring to mind at the moment because of what our former Prime Minister said. The current government are in very vigorous talks with their counterparts in China, and it looks as if those tariffs and bans, at least to a degree, will be lifted. So that adds fuel to the fire. And I think you're right on the money. I think the Aussie isn't looking too bad at the moment.
No, and the thing with the Aussie, and the final thing that I will say about it is that it may be a timing issue. The Aussie may well weaken over the course of the next week, 2 weeks, 2 months. But over the longer term period, if you compare economic value, the Australian economy has got much stronger economic value than the likes of the Eurozone. So as soon as Christine Lagarde hints at pausing, and there might be a pause coming because the data suggests she should, of course, the inflation data doesn't, but the other data suggests you should. Then I think the Euro Aussie is an absolute stalwart sell. And when you consider where it's gone, all the way back up to this potential resistance line here, without too much of a pause, and this is a weekly chart, then I think there's a decent chance that we get at least a dip, if not right back down to this horizontal level here, which incidentally, when you draw it in, would create a pretty good looking inverted head and shoulders. So coming back down to this left shoulder, there's the head. That right shoulder is going to take around about that much time. So this has got some time to come down and some time to ease. So I like the look at this one. So I'll look out for that over the course of the next few months. Now, the other one, just very, very briefly, because I know George is in the room and I'd like to hear from George, is the Swissy, because the PPIs last week came out from Switzerland and they were pretty conducive for a some potential weakness in this currency. Now we've got Simon Jordan and the like stating that if they were to leave interest rates at 1.5%, which they currently are, then the road for inflation to dip would be in around about 12 months' time, and they seem relatively comfortable with that. And the banking crisis that we saw globally, but particularly in Switzerland, again appears to have lifted. So we might start to get a little bit more dovish language from the S&B as well. And that would bring me to a dollar Swiss long, because the Fed don't seem to be there as yet. It might be again a little bit early, but they don't seem to be there as yet. But it would definitely drive me towards the Aussie Swiss. Another one that I quite like the look of. Could take a little bit more of a dip, but I like the Aussie Swiss for some upside. I just think that the S&B, if anybody's going to be pausing soon, as soon as they see some kind of relief from inflationary pressures, it's going to be the likes of the S&B and the ECB. So those two sit at the bottom of the pile for me. Even though the economically, actually Switzerland's not too bad. But let's hear from George, mate, because I feel like I've been going on for a little while now, and I don't think it would be fair for everybody in the room, particularly, not to hear what George has got to say about the markets.
Hang on, he's probably asleep listening to us. George, wake up.
Oh, you're doing receptions too good at the minute, George. Oh, there he is. There you are.
How you doing, buddy? Think he's got a bad connection.
No, I think he has. I'm just going to draw this little level in here. Look at that, mate. Look at where we sit. You want to find resistance? You want to find support? Just get these trend lines in.
What's that, Aussie Swiss?
No, this is the this is the Aussie Swiss. Yeah. So we're on top of this area here. George, as soon as you're ready, but mate, then just step in. But I think your connection might not be great at the minute. That would be enough for me to start looking for buy signals on a shorter term time frame. It's a week. It
also seems that the market is prepared to take a little bit of risk on board at the moment as well.
Yeah, good point.
And that points towards that being a buy zone as well.
Yeah, agreed. George, you're there.
I'm back. I've just switched my connection. I hope that's better.
Oh,
it worked, mate. Yep.
Excellent. How are you guys doing?
Yeah, we're good, buddy. We're good.
Top of the world, mate. Absolutely top of the world.
Beautiful. I'm just
what's going
having a look. I'm trying to share my screen. I need those famous powers.
Oh my goodness gracious me! What we'll have to do is give you a host link to join rather than me having to remember to give you powers all the time, because you are all powerful, George. You deserve it.
And all right, I think something is happening. Good.
Gotcha.
Yeah. Let's just have a look at the rationale of what I'm trying to do on the daily. So this is gold, and on the daily chart. So coming off what I think is a strong channel, bull spike, this move that we have here, spike and channel. So that's a pretty common structure in terms of trends. You get a spike and a channel, and whatever form you get for the channel, could be a tight channel, could be a broad channel like we have. But in this case, we had a broad channel. So this is how I drew the channel here. So just from here, connecting that low of April, and then just anchoring to that level. So coming off Friday, coming off the top of the channel, I think the bears have a high probability of pushing the market down to this channel. And I think the bulls are going to remain in the channel. They want to, create a third push. So if you think of a wedge pattern, those three pushes that I'm always talking about, in a channel, it's exactly the same thing, except it's just sloping up. So that will be the first, that will be the second, and that will be the third. So if we get down to this level, then, if the bulls are strong, they're just going to, try and keep the channel intact. It keep going up, hoping to break out above there. Now, depending on how strong the bears are, I think there's a high probability of the bears trying to take out this low of today and seeing if they can get to the bottom of the channel. But of course, if the bears are weak, the reverse of the story, the bulls will keep going up. But on that, just going into the market this morning and looking at what price has done so far. So I'm going to open it up just now so we can just get a sense of where we are presently. But just starting right, if you look from the morning Asian session open of the day, trading range behavior. I mean, you could have traded in there if you wanted to, if you were in the market. But presently, that whole trading range of the Asian session, the measured move is there. So that's an area that, I think the bulls have an opportunity to break out above, but I think it's more bearish. I also have marked that level. See this dotted blue line as a key level, as a breakout point. So on Friday, bear breakout, pullback, and that low was a key low that the bulls would have loved to defend, but they failed, broke out beneath it. So I see that as an area where the bears are likely to come back again. So with that in mind, and just having a look at the pattern we have here, measured move up here, and that point is a midpoint of range of yesterday's midpoint of Friday, which is also within this area. So I just put a stop above that. And I just put a very low risk, 0.25%. And I mean, if we start to get above that and the bulls are strong, I can decide whether to stay in or not. So I've gone short on that whole thesis ahead on the daily.
So George, can I ask you a question on that, mate?
Yes, sir. Yeah.
And you may have sort of like mentioned this before. So you're interested in the range of the Asian session, and see sort of like, as things carry on. Would you also then look at the European session to determine what might happen in the US session, and then subsequently the US session to determine what happens in the Asian? I.e., is it cyclical, or is it just the Asian session of interest?
It's cyclical. So by the time you get to the US session, things are even clearer, because by that time you'll have probably a clear low of the day or clear high of the day. Yep. And throughout the European session, you will start to see where we're in a bull trend, bear trend, trading range. So a lot more information is provided, so it becomes easier to trade into the US session. And then, of course, US into Asian, just like I looked at it here, it's absolutely key to look at US to see what happened in that US session towards the end, key lower highs, even that whole Asian session. I mean, this level here, I just call it key level, so I move it around. At some point, there was that level. So the Asian session was contained within this key lower high. It broke out above it, and I just have a look at, well, is there anything key on the left? You've got that. You've also got the midpoint of the range of yesterday. So
have you ever and do you think that there would be any benefit to creating a bar that actually shows the Asian session? So obviously we've got 5-minute bars, we've got 15-minute bars. Could you actually create your own bar that, it bought here, it sold down there, there was the high there. So you create your own OHLC bar for the Asian session. Is there any mileage in that, George, or am I just getting a bit off kind of?
No, there would be, and what it would do is it would make your processing of information easier. Okay? Yeah. I've already got the information in, so I've got, that's the open of the day, so that would be an open, right? That would be the low, the session, and there is a high, and then the close. So because I've seen this a lot of times, just by looking at it, I can process that. So if you're able to create that, then in a snapshot, you can easily see what's happening. So it is, it will be very useful for someone starting to have a look, who wants a simpler way to process information.
Mate, while you're on the witness stand, what if you come to open of US, right? You come to New York, and prices moved, let's say 1.25 the ATR of the last 5 days. Would that prevent you from buying or selling if you're at the top of that range?
No, because for me, when in terms of the ATR, I'm only interested. I hardly even look at it. I guess I probably look at it because I can let me just put this where it should be seen. I think by looking at the candles themselves, I am automatically processing the ATR, if that makes sense in my head. So
yes, it does make sense to me. Yes.
Yeah. So when I look at the daily, and I've got what I see as the key levels. In this case, is the channel. This particular candle, I'm going to have the high of it, the low of it marked on the 5-minute. And I always look at the last 3 candles, 3 days candles, right? So 1, 2, 3, I can see that everything's kind of contained within there. And that's all I'm interested in. I'm not going to worry about the extent of it. But already I've kind of computed at some level the range, of the previous 3 days, that today's, yesterday's candle has got the largest range. So if the market breaks beneath that or above that or gets to midpoint, that's the areas I'm interested in. So when I come to the US session, if I was going through the US session, then what I'm interested in is high of yesterday, the low of yesterday. So the midpoint, I've already spoken about. I've just put my stop above that because I know this whole range from yesterday, it's greater than the range of the previous 3 days.
Yep.
So that's all my consideration. And I'm looking at what's unfolding within the day. Then what becomes critical, of course, or not become this constantly critical during the day, is just, when I start to get to these dotted lines, I know that's key from yesterday, midpoint. If I get to that magenta line, that's the open of the day. As the day moves, I want to see, is the market being contained above or contained below that? That's going to be influencing my thinking, because that's going to determine how the day is going to end. To the bulls, as far as the bulls are concerned, if they can keep price above the open of the day, they have a chance. It's dodgy, but little body, good for them. But if the bears close beneath it, then setting up for the next day, the bears are in control. Then when I go into the next day, the day's range, let's say we end here, high of today, low of today, key going into that session. But this moving key level of mine would then come and mark this low, because this range is still bigger than today. If it ends up as an inside candle, then I've got to watch that as the days unfolding.
Okay, cool, interesting.
I think it's more, you can draw a lot of things. If you were to see some of my earlier slides years back, I mean, they had a lot of horizontal levels and channels. But as time progresses, you've got them in your neural constructs. So you don't necessarily you don't have to put everything in just to keep your charts
They're locked
clean.
in. Yeah. Yeah.
That's exactly that. Yeah.
Cheers, mate. Sorry, you're off the witness stand now. You may step down.
I have told the truth, Your Honor, nothing but the
truth. Brilliant.
Hang Seng 50. So when I look at, I mean, today is just accelerated up. Now, before we got into the day, I think I spoke about this, hopefully not confusing with the session I had the guys last. This 1 bar doji is, whenever you see a 1 bar doji, you got to mark, the highs and the lows of it and what's likely to happen. So just connecting that before this took place, I thought that potential expanding triangle top. And when I see those kind of patterns, usually there's a reversal down back into the middle. And, the bears are strong, they want to accelerate down, but then they'll have a problem, with the low of the expanding triangle. So it's a reversal pattern. So I am looking for ways to go short here. Now you might say, well, listen, it's strongly bullish. Why would you want to do that? Well, it's because of the pattern, but also if I look to the left, this is still the dominant candle in the market. If you think about it so far, I mean, at some point, this candle in itself was a huge bull candle. Then whatever caused it, who knows, news or just trading for the day, sold off and follow through. And as far as the bears were concerned, they would have thought bear breakout, pull back, lower high. So they want to just create a double top in here. So, there's always that probability. I don't know, lower chance 10, 15, 20% that the bulls can accelerate or keep it up there. That's fine, but I'm looking to go short here, thinking that there's a high probability that a proper expanding triangle top will be formed, failed breakout selling, and we might end up with just a tail on this candle, or it might just be a beautiful outside candle. So we'll wait to see. But down to the 5 minute, I'm looking for ways to short the Hang Seng 50. And what I would want to see, I mean, this wedge top is beautiful. And if you look at it right from the Asian session, yes, the market has gone up, but you would not say this is strongly bullish. It's more like a bull leg in a trading range, which means there is a possibility that the market will just continue to do trading range price action, but selling off. Whether we actually get below the high of yesterday and sell off with something else. But, if I get the way it's going now is good, but what I want to see is just a bit of bearish price action. Then a pullback of any sorts, lower high. I'll be keen to sell that with an objective to see how far we get here and what happens here. And if I go somewhere safe to place my stop, I'll do that, hoping for a break below that. So I'm looking to short this market, but I've got to wait for a little bit more confirmation on it. Then finally, UK 100 took a short earlier on, and might be saying, goodness me, George, why on earth are you shorting this market? Well, again, it's what's taking place on the left. All through here, as the market was going up, I kept thinking the bears are strong. They have a chance to create a lower high. And, we spoke about this gap up. I remember this last week, and then the problem of the doji. And, the bulls have continued to push the market up, but bears come in. So I don't know if this candle is going to become the one that creates the lower high, or we still go up to test, those levels up there. But I keep looking to say, I'm happy to go in with a very low risk, again, 0.25% wide stop, which I can always close at less than a 0.25% risk. So absolutely no worries there about capital preservation, which is one of my big pet hobbies. Preserve your capital wisely. But if the bears are going to come back and start to sell off, then I wanna be in that. So there's in my view, I think there's a higher probability, but it may only be 60% that the bears will come in, which means, of course, if you were to be told the usual story that the best sniper can hit your head at 2 Ks away, but George, you can stand 4 Ks away. It's only got 10% chance of hitting you.
Yeah.
There's no, so that's where I think of it. So there's always that possibility. That's why if I'm taking a reversal trade, I never go at full risk, which can be anything like 1 or 2% or 3%, whatever. So it's say 0.25%. I mean, the stop is far away. I'm going to wait to see what happens. So that's present where I am at. Now, I got to tell you, there were 4 markets here, Euro Yen last week. At the same time, I had told you about my commitment to my health and my wife that I will only work 12 hours in the month.
Yes,
and I realized, that from Hang Seng 315 to the open of the US markets, that's 12. And if you trade in Euro Yen, you better be prepared to work a few more hours. So I thought it's prudent to honor my commitments. Otherwise, I won't.
To the market or to your wife?
Yeah. So I just took it off. So
who won? Did Marpool or Marquette win?
Very good, yeah.
Marpool
won. Straight off the top of my head. Brilliant. Marpool won. Brilliant. That's the way it should be.
And it's quite funny. It's in March, the day that I made the most money was a day that I broke my commitment to her Now, every Friday, my time, 1 p.m., which presently now the daylight time is 12 noon UK. I'm out of the market. I take it for lunch. That's been
Oh, well
long-standing.
done, mate.
But on that particular day, I said, "Oh man, it's looking so juicy. Just take it." And I put stops in the market in case I got stopped out. But you know, when you go out, your mind is just there. And I was calm, and I told her I left some trades in the market. She just gave me a look, didn't say anything. Good wife. I came back and voila, big profits. And I closed it, but it just ate me to say, you've broken a rule and you made money. That's the worst thing that you can ever do.
Yes, indeed. Yep.
So I vowed to myself that was one lapse in years. It's not going to happen again.
Yeah, I think that's fair, mate. I think that's fair. And there's enough opportunities, I guess, not to have to break those rules. And I'm sure over time, a longer time period, if you were to continue to do that, you'd probably end up around about break even anyway.
You will. You definitely will.
That's
proven. Yeah.
Really like that, mate.
That's tossing the coin, right? It's the same thing. You toss a coin 100 times, you're going to get 50-50.
It's exactly that. So you put rules in, you got to discipline yourself to stick to the rules.
You do, and those things that you get as a result of that are called brownie points, right?
They are worth it.
Yeah, exactly.
Yeah.
Ash, actually, whilst we're on the FTSE, I wonder, can we get a consensus here? Because to my mind, that all-time high, which is only a few weeks ago, is now under, I won't say it's under threat, but and I think, George, you're of the same opinion. I'd like to hear your opinion, Ash, as to whether this can go long at all above an all-time high in this current climate. Let me put it that way.
Do you know what I find quite interesting about the FTSE's run is that the FTSE is very cyclical. So if you kind of think about the different types of the different types of sentiment that makes certain markets, the FTSE is a very cyclical market, and what that means is that when things like economic expansion start to happen and people do then start to draw on more oil and they do start to go and get more bank loans and things like that, and they need to borrow money, the FTSE does well because that's what its market is made up of. And that suggests that if this recession fear that everybody's talking about is coming, the FTSE may well be one of the biggest losers in that particular scenario, because people will need, the demand will drop off, the demand for oil will drop off, the demand for finance will drop off, which subsequently will affect banking profits, and they'll affect the likes of Shell and BP, their profits. It'll also affect the likes of Glencore and Rio Tinto and Anglo America, which are the mining stocks. So if people are building less, so it's really about this recession narrative that I'm finding quite interesting with the FTSE. And for that reason, I would suggest that getting through this all-time high in this particular leg it has diminished sufficiently enough to look for some downside. Now, I don't know if we're going to collapse and roll over with the FTSE, but the move has surprised me to this point. The economic data has probably been robust at best. It's not been awful, but it hasn't been stellar either. But it's been robust at best. And I guess people have been buying it up, waiting to see whether we turn the corner and then all of a sudden we start to take off economically globally. And then the FTSE 100 will be relatively cheap at these prices. But I don't see that happening. I think that, as we talked about earlier, there's still this little kind of cloud of the banking situation, which could emerge at any point. There's still this situation where the financial tightening from central banks will eventually choke enough businesses so we get more collapses, and certainly sort of like the consumer starts to tighten their belt as well, and that would turn me away from something like the FTSE. So the move has surprised me. Those sort of last 5 or 6 bars, when I look at things like that, I just sort of think, well, that's floating. and things don't float, gravity will bring that down. It's just not. It's highly irregular. I'm not saying it never happens, but it's highly irregular for markets just to go green, 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 green without any kind of move back down again. So for all those reasons, I'd be with George. You know, I think that there's the neckline of that inverted head, of the head and shoulders looks like it may well be a resistance point. I can see the red bar on the 3rd of February, and I can see the red bar on around about the 24th of February with 2 lows there. And I'd be drawing a trend line through that. Not that one, mate, just a bit further back. So the very start of the month, the first red bar of the month, that one, the low there, I'd be drawing a trend line from that low. Not a horizontal level, a trend line. Yeah, I'll draw a trend line from that low and
hold on. Let's get rid of this.
See, whilst George is doing that, if you look at that,
the last trend line, the last red one of the month, the last red of the month, that one. Yeah, and then I extrapolate it right, see where we are.
Oh, I see what you do. Yeah.
Yeah, and look where we are. I mean, it's just, you know, we've just tested. We're basically all we're doing is tested the head and shoulders neckline, but it's taken months. Well, weeks, I should say. It's taken weeks for us to get there, but that is a red flag for me.
But if you use the elevator staircase analogy and look at the volume or size of those seller bars, they far outweigh. There's far more commitment in the sellers than there is in the buyers, without question to me. So I think we're very, very quickly approaching the sell zone.
Yeah, I'd agree with that, mate.
Jeff, can I just make a comment there?
Hello, Phil.
G'day.
How you doing, bud?
Yeah, pretty
Having
good.
a ball.
Yeah, mate, obviously I can't speak your language yet. I'm not educated enough, but you know the system I use. And I just wanted to pass this on. At the moment, it's a little bit, the commitment of the daily is leveling out slightly, but on the weekly, it's 100% a continuation trade. So you can interpret that for your system, but I just sort of pass it on.
So continuation to the upside, right?
Correct.
Yeah. See, I find that interesting, and I'll tell you something else about the FTSE is that it tends to top out the end of May, and there may well be some still some price action. Now, that's not to say it goes through this trend line, because that strength might just get us into a bit of a range for a while.
Yeah.
But if we do see a range, my personal suggestion would be, especially if that range takes us into middle of May, my suggestion would be that the range is much more likely to break to the downside than the upside. And it's anticipating the next move rather than saying, okay, what's going to happen? Absolutely. What's going to happen next? That is uncertain, because there does seem to be still some really keen investors that want to continue to buy the FTSE. But what's going to happen over the course of the next 2, maybe 3, 4 weeks? In that scenario, I'd be much more interested to see the fluctuations in price. Same with the Euro Aussie, sorry. Same sort of thing. I'm interested in a slightly longer term. What happens over the course of the next few weeks? Because if this suggests it's topping out, then I'd be interested in looking for the short. But in the immediate scenario, there seems to be a very, very motivated market to push things to the upside here. But those bars don't look great. Sorry,
Ash. Do you think that continuation is strong enough to drive it through the high, the all-time high?
No.
Sorry, that was a question to Phil.
Sorry, mate. I didn't look at it in. Let me see.
In that context, right?
Yeah,
okay.
Yeah. I'm just looking at it now quickly, but I think it's. I mean, actually, you guys are correct. I'm not disagreeing with any of what you're saying. But just for the moment and the shape of all the bits and pieces that I use, I can quite easily see it going back to that high for sure. Because that's only, let's face it, that could be a week away.
Yeah, that's a really interesting point, Phil. I mean, to get back to the high is one thing. What do you think about going through it?
Yeah, well, I guess as Jeff knows, I'm sort of fairly when I get something in my head, or once I decide that's what's happening, you know, I can be pretty strong about it. But I'm trying to moderate, trying to look at it here from. I always try and imagine what might not happen. You know, the same as you guys do. But on the show with the weekly, of course, it reacts slower than the daily, as you know, and the way it's gone. At the moment, where it's changed direction at the moment, it could easily go up for. It could easily go up. I could say easily 2 weeks. No worries at all.
Yeah.
Okay. Now I'm with tenterhooks. I'm going to be waiting for 2 weeks to sell this bloody thing. Goodness me.
Sorry, Jeff.
That's okay, mate. No problem. Look, I think sharing these little snippets of knowledge is fantastic. And if we've got reason to believe, rather than, okay, I just think it's going there, then that adds to the flavour of the show. And that's exactly what the show is all about, sharing things. And thanks, mate. Really appreciate that. That's good.
Yeah, thanks, Phil.
Thank you.
Phil uses a system whereby he combines a whole bunch of information that's coming in, technical information, not fundamental information. And he's trying to teach me his method. And wow, it is so kind of topsy-turvy. And basically he's been trading stocks for a long, long time. And it's so topsy-turvy to the way I think that I really struggle with going with the flow. And you know, I hate trading trends. Trends to me are just roadmaps to the next range. But if Phil says that's a continuation, then I'd be very, very willing to listen to what he's saying, because his indicators are telling him that. And okay, bloody hell, I've got to wait 2 weeks again.
Yeah.
Having said that, Jeff, I think, what's the term? It might seem a bit out there to you, but I find, because as you know, your system and mine, we're completely different. But I find myself more and more now, I say, well, what would Jeff be doing here? And look, at your system fits in with mine far more than you think at this stage, because I think my system's obviously a bit harder to learn, perhaps, than what yours is. You know, in general, for a quick look, yours is not so bad to get your head around, whereas mine's a lot more complicated than that. But every time, the more you teach me, the more I can apply that straight to the top of my charts. And the only thing that I find different is, as you know, we're waiting for a breakout and then a retest, whereas I tend to, it depends where it is on the cycle, of course. If it's coming off the bottom, it's one thing. If it's halfway up, it's another. But generally, I'll be in by the time you've got your retest and then away. But
exactly.
Apart from that, if you know both systems, your stuff and my stuff really dovetails. To me, it's another string in the bow, you know?
Yeah, it's like another tick, another layer. Yep, agreed. 100%. Really appreciate the input, mate. That's cool.
Yeah, brilliant stuff. Well, we probably better wrap, actually. We are at the top of the hour. Thanks, Phil. Really appreciate you coming on, mate. And everybody's always welcome. You know, that's what this show is about. It's about sort of seeing if we can just kind of collate some ideas. And
wait till Phil learns how to share his charts. You holy snap and duck shit. You'll go.
Oh well, if he's up for that, that'd be amazing. That would be amazing.
He will. He will.
I thought sharing indicators to get me thrown out.
No,
you're all right, mate. No, definitely not. I mean, we love to see really where you're getting the evidence from, because it might shine a light on, you know, where somebody else might be missing part of their approach. So yeah, for sure. Next time, maybe show us some charts. That'd be awesome.
Yeah, well, something you guys are interested in, I can apply. We can use the FTSE as one I've been looking at a bit lately. I can at least show you the logic involved. Anyway, for sure. No,
that'd be amazing, mate. Yeah, let's come back to that Monday. If you're free next Monday, if you're
Thursday
around.
We're on Thursday, right?
Well, I don't know if George might want to have a look at it as well.
Oh, okay, cool.
Otherwise, he'll miss out.
Yeah, well, I'm flexible, as Jeff knows. So whatever you guys decide, I'll work in with if I can. Yeah, for sure.
Cool. Okay. All right. Well, let's wrap it up for now, and Jeff and I'll talk about what might be the best day, and we'll do it next time round. So we'll wrap it up. We are probably in a bit of a slightly quieter market right now, anyway. So I don't know whether any of these things will necessarily shape up, but you and I will be back Thursday. Thanks so much, George, as always, mate, for coming in. Really interesting stuff. might not be the best day to kind of put on any longer term positions. I'm not sure if this is going to shape up just yet, but we'll see. And you and I will be back Thursday, Jeff, right?
Well, yes, we will, with a vengeance. And we've got an untested daily pivot on the euro versus the dollar, guys, at the moment. That doesn't mean you just enter the market long, but what it does mean is keep your eyes open, because if you get the opportunity to trade that to the daily pivot, in particular off the weekly pivot, if we've got a nice retracement now back to around about the 109.70 mark or thereabouts, I think we could have a nice little buy targeting the daily pivot at 110. Sounds good to me, but wait for the setup. It's not a fait accompli that it'll go there. So you've got to wait until it sets up for you to enter the market. Thank you for being our trading buddies, everyone. It's wonderful to have you on board. And those of you who are joining us for the first time, welcome to you in particular. Hope you got something out of it. And we look forward to your company again on Thursday. If you can't be there, we'll be back next Monday at the very same time. Have a great week ahead, and bye-bye for now. See ya.